So, good evening, everyone. Tonight we are going to have a little recap on DXY, the dollar index, along with euro. I want to have a quick look at what it has done and what we can expect, and then I'll start from scratch tonight to see what we can potentially look for. But first, I want to look at the economical calendar to see what we can expect for this week and upcoming week, as this week will be the last trading week of the current quarter month. So we can expect some surprise volatility towards the end. And I believe, yeah, Friday we have some high impact news. Tomorrow we have some things related to crude oil, but that's normally always on Wednesday, so that's okay. We got a testimony tomorrow at 4 p.m. from Feds. Then Thursday we have GDP. Not really sure why that isn't labeled as high impact, because that's high impact as well. And then throughout the day we have PCE things, jobless claims, another things from crude oil, Fed speaking, Mr. Barkin. And on Friday we have personal income month on month, core PCE price index, so high impact news at 2:30, which is New York Open, basically. The hour before New York Open at 8:30 a.m. New York time. And then throughout the day we have things related with the Michigan consumer sentiment. So I think Friday, as it will be the last day of the week, the last day of the month, and the last day of the quarter, I believe Friday we will see some volatility. And then next month, the first week, we have a couple of high impactful news like PMI, manufacturing PMI, JOLTS job openings. I think that's an important one. And Wednesday we have a lot of things. Next Thursday, pretty shallow, so not really interested in that. And then Friday, non-farm payrolls. So probably won't be trading Thursday, as we don't really have any very high impactful news drivers, and it's the day before NFP. So I won't be participating on Thursday, probably. I'll be looking for trades up until Wednesday AM session. So after lunch, it's over for me, and then I'll wait for the PM session on that Friday, next Friday. And then later in the month, we have core inflation CPI, FOMC minutes. That's a little bit too far in the future for now. So upcoming Friday, we got quite a bunch. And we got some Fed people speaking as well towards the end of the trading day. So Friday is the place to be, basically. So let's have a look at dollar. So we finally broke down from this little accumulation. We had that manipulation run up that created a daily swing high. Then we had a market structure break or shift. Pretty much, if you take a PD array, first thing that we see is a fair value gap, and we had a rundown. So in the end, we attacked these relative equal lows, even though they were taken, still relative equal. We hit the daily breaker, we filled it fully. We had a little bump up, and we had quite a rejection already down. But a gap down today, and that's not really bullish at all. If you see this kind of gap down close to being at the current local low, but it's in the rejection block currently, so you can still have a reaction of this. Midpoint of that rejection block sits at 102.206. So what I rather saw coming on the dollar index after this bump up is if we go on the 1 hour, we had two fair value gaps over here. What I preferred to see was that this gap would hold and we see another run up, but we did not really get that. The only thing it has done is it took buy side liquidity from that swing high. After a little accumulation lower, we efficiently delivered the imbalance in this. So this is the sell side imbalance, buy side inefficiency. So how does the market efficiently deliver price? By delivering buy side liquidity. So we did that. And like I said, I rather saw it hold instead of going down lower to see a little bump up higher and then target this fair value gap over here. That was my initial thought. But the dollar has been relatively weak across past few weeks, months. And on the new week opening, we had an initial little gap and quite a little accumulation range, and we broke down lower, and it basically gave all of this strength basically back in a high resistance liquidity run lower. So very sloppy channeling down. And right now, I have no really any clue what it's going to do on the lower time frames at least. We are in discount. We have a fair value gap here. And it's hovering around the midpoint of that fair value gap. Also with the start of this mitigation block. But we still have this opening gap. I believe it's an opening gap, but relative equal highs. So as we speak, currently DXY took out this local low inside this fair value gap by a couple points. What I want to see, and I believe this is also on OTE values currently. What I would like to see for a little strength on dollar is that it doesn't break below the 0.79 basically. So I want to see that hold and gravitate towards this gap. And then I'm interested in if this gap is going to give a rejection or further downside. Like if we have this current range right now from this swing high to the current low, if we see something like this and then we go back in the range and then we go for the low ultimately, pretty much faking out to the downside, inducing sell side liquidity or shorts, then pump it back up and grab all those trail stop losses, go back in the opening range and then reject further down to go for the lows. But that's not something I would like to see. I would like to see some strength on dollar, but seasonal tendency wise, dollar is relatively weak in these months. But if and when we see a reversal around this zone, and I prefer not to go down to this zone, but around this zone, if we see a reversal and we go back in the opening range, or at least this gap, I am interested in if it rejects or it breaks through it, retest, and acts as support to go higher and target the highs. We have a few highs to target lower. And if it indeed does something like this, that we go inside it, we initially reject from it, but we find at around support of that gap, then push a little bit higher, retest this again as an old high as well, and then look for further upside for the next run up. And I always suggest this was an OTE setup, and then we can look for further targets higher. And then I want to know the expansion from this run down for expansion targets up for our standard deviations. So negative 0.34 is at our 0.5 standard deviation. I want to know the 618, 706. These line up, that one lines up, and probably this is going to be a yes as well. And ultimately, the 2.5 standard deviation up is at around that one. And I'm considering this only if we see a rejection from the zone and that the gap is obviously getting broken and access support. That's really a must-have for me at the moment, given how it's all giving it back right now compared to, like, with a little bit of context and narrative, we had an initial drop down, quite a strong drop, wickless candle as well, and they tend to be revisited. Then we had a little accumulation. We had lower time frame market structure shifts. We had another run up. So one strong move got reversed with an equal opposing strong move up. And then it just continues to dump like we saw over here. So there is really not really any strength in dollar. And to change it, I would like to see something similar to this, that we break that gap and that it acts as support. That's what I would like to see for strength. Then let's have a look at what's a potential draw on liquidity. So if we go on a monthly time frame, then we have a fair value gap over here. And it fails to go back inside this gap for 3 months, basically, since the start of the year. So I am inclined to think, based on what I see on the monthly so far and how I relate it to fractal and price action, that this is going to be a breakaway gap. Meant to be not filled right away, but revisited later on. Then we have another gap over here. That's a bullish fair value gap. Why it is a bullish fair value gap? Pretty much just because we are in discount from that low to that high. There's one price swing on a monthly time frame, and that's the first one in discount that we got the initial rejection from, or bounce, a supportive reaction, and then we took out that monthly high, and it's giving it all back, no strength whatsoever. Then if we drop the time frame lower, then we go into the weekly. So first thing what we see on the weekly is we had a weekly SIBI over here. There's for value gap. Pretty much we had a balanced price range over here as well, and it just failed to go over it. So bearish order flow, we saw that drop later on, aiming for that weekly low over here, tapping inside that monthly fair value gap that's resting over here. And all it did right now was verging a little bit on buy side, and now potentially we are going for sell side. And if we do, we don't really have anything over here. Everything has been rebalanced except for this small little weekly gap, very small one. So over here we already tapped inside it. So that one is basically filled. And this section is rebalanced on the weekly. Let's have a look on the daily. So on the daily we have this rejection block with a 50% at 100 almost psychological level. And on the consolidation range with a little gap below it. So if we fill out the monthly fair value gap, we would tap in that weekly fair value gap as well. We have another weekly fair value gap over there for now. We have a small one over there. I'm more interested in that up close candle. Same for this one. We already went below this one. Further up, we don't really have anything significant except for this gap. And then on the daily, we have a little bit more. We still have this volume imbalance on the daily, which is below the current low. Should we come down again? So I'm going to definitely mark this one out. Marking this one out as well, because I don't believe the dollar is going to pump that high in 3.5 hours. Still have the 50% of this wick. So potential drawn liquidity going to be this low in the end, on a higher time frame at least. And then look for that volume gap, volume imbalance. Or we don't go to the volume imbalance at all. And that's an alternative, that we see a little retracement lower to that 50%, maybe a little wick through it, then a run up higher for that fair value gap over here. Then we have this volume imbalance, or at least this zone with this block and this volume imbalance. I want to see this as hold as support and then aim for higher on that upper fair value gap. That's one scenario that I have in mind right now. Second one is going for that volume gap first, then run higher for that upper fair value gap by taking sell side first, and then we go for buy side. That's one scenario. And then the third one that I have in mind is going to the volume imbalance, hover around it, not giving a clear indication to go higher or to go lower, and then drop further down to make this something like a distribution. So we got the expansion down, the distribution down, and then we get a consolidation range at around the volume imbalance, and then target sell side in the end. And go inside the monthly fair value gap again. And we still have to close this down. And that would be an equal move by just going a little bit higher over here, by going a little bit lower over here, and then see further. So that's my third scenario that I have in mind right now. Then on the lower time frames, now first I want to look at euro. So euro did go in this gap by the looks of it, but dollar failed to go in that gap. Tricky, especially when the correlation with other assets is so off. So dollar way weaker and euro way stronger. Cleaner delivery. Little SMT there. $172. So we already backtested the 6-month rejection block, pump up, then we created here a new rejection block, held it, and now it looks like it wants to go for these both these highs, I would say. Especially this high, since that high nearly touched the midpoint, but slightly off. I'm interested to see if Euro can expand higher for this weekly volume gap. And maybe we get something of a structure like this, perhaps. So from body to body, one standard deviation sits at around the 50% of that weekly volume imbalance. And a wick to wick 0.5 standard deviation basically fills out the entire volume imbalance. We got a weekly high over here, so that's basically a potential drawn liquidity and efficiently delivering this imbalance. And we get a nice power of 3 setup on a weekly, potentially. So if we see something like this on Euro, Then, of course, we are going to see the opposite on dollar. But we don't have a imbalance over here, at least not on this chart from TVC. What we do have is relative equal lows. Golden Gaussian block potentially. So that's annoying. We don't really have anything juicy on dollar. So we do have this block. I'll do wick to wick for this one, since the wicks are obviously larger than the entire body. And then I run higher in that little gap over there. And then we basically have the same structure on dollar. So yeah, turning euro on a lower time frame, frustrating as it seems, it really is. Just one channel up, staircase up, maybe, perhaps, elevator down. Dollar still has this gap that DXY doesn't have, I think. see. That's that gap. So dollar already closed this gap. Euro is not even in this gap. Small delay. I think we need to be a little bit patient for this week. Either bursting through this gap on dollar or on euro. Then I think that high will be a target for a drawn liquidity. And the same for euro or dollar. If it bursts through this imbalance, that little gap over there and that little gap over here that already closed, then target would be that low for sure. And we still have it responded from that. We still have this part unfilled on the 1 hour. And euro already fully filled that one in. That one already closed. Next one up is over here. And we have buy side resting above below. So that might be a good draw as well. So we could see something like this, that we are gravitating towards this SIBI. Pick out that high, which would be previous month high if it gets taken after this week. While doing so, dollar may fill the rest of that gap. And then we could potentially have an SMT divergence if it doesn't break that low from February 3rd. So yeah, that's basically what I think of dollar and euro right now. Just needs to give us an indication of strength. And that's about it. So I've posted my levels on Discord now. Otherwise I'm going to forget it. And if we come down in the end after all, then we have this very nice gap to the upside as a target. Because we have this unfilled part on the 1 hour below. Could definitely see this happening, to be fair, but not with the kind of weakness that we see on dollar thus far. I really need to see that push up to even think of aiming for that fair value gap. Otherwise, I think it just will continue dumping lower. So that's a real must have for me. We look for some strength. And as far as this week, we had GDP Thursday and PCE, core PCE, Fed speaking, quarterly things, Chicago PMI. So impactful news day for a Friday. So my focus will be on Friday, and then look for easy trades on Thursday. Hopefully with a little bit better price delivery, because today has been awful, just horrible. Yeah, let's see what we can do. So ES gave that nice jump. Got it open. And there we have it. New week opening gap. So very, 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 very nice. That means my take profits are hit as well. Booyah. So standard deviation 3. And that daily volume imbalance was key in the end. So by the looks of it, we get this power 3 setup. For this week. Filled out the breaker, hit balance price range on the 1 hour. So final hour did its job again. Very, very nice. Okay, so that's it going to be for me. On what I expect on dollar and what I expect on euro. I want to see some strength basically on dollar and then see what happens in this gap. That's key for me. That gap is key for me. Going to sudden alert as well. Going to sudden alert there as well. So now would be a good time to change structure, get a shift, especially with filling that gap. And then we can have potentially a standard deviation right in that void. That's an actual void. But that will be nice. For dollar on a lower time frame. Go in that gap. Little rejection, making this a breaker block, retest of the fair value gap, and then go for that gap. That would be nice. Yeah, that's something I am looking for. So that's it for me. And I want to thank you guys for your attention again. On Friday, this Friday, we are going to have a look at oil. Little recap on what oil has done. Because it gave that very nice move to the downside. And now we are going to look for new opportunities for either downside or upside, and that's for Friday. And then for after upcoming Friday, I don't have any streams planned, so I'll add new streams in the planning or events on Discord, so you guys can get notified as well. And again, I want to thank you guys for your attention. I hope it's clear for you guys what I look for on dollar. I want to see some strength, a little more weakness on euro. And I want to see this hold, basically. If this doesn't hold, it's going for a low. Never. But this is a start to go for that gap at least. And then see further what it's going to do. It can reject and then go for the low, like I said, or again, break through it, reclaim it, backtest it, acting as support, and then push higher. So that's it for me, and thank you guys for your attention, and I'll see you guys Friday for my oil update. So have a good evening and goodbye.